Hi everyone, I am Dr. Purushottam DN, Assistant Professor of Commerce. Let us begin with the session for Become Third Semester course. Subject entitled Indian Financial System and topic entitled Introduction of Stock Exchange. A stock exchange is a marketplace where the financial securities issued by companies are bought and sold. They are part of the broader capital market ecosystem. Securities issued by the company such as shares, bonds or traded on the stock exchanges. After they have been issued in the primary market, a company desires of listing its security on a stock exchange has to enter into an agreement with the exchange to ensure that its securities are allowed for trading on that particular exchange. Stock exchanges play a key role in the creating liquidity for financial securities. Securities trading on stock exchange is based on which ensure that the best to buy order matches with the best seller order. Stock exchanges earn money by charging fees to the trading members. A stock exchange is an important factor in the capital market. It is secure place where the trading is done in a systematic way. Here, the securities are bought and sold as per the well-structured rules and regulations. Securities mentioned here includes debentures, shares issued by the public company that is correctly listed at the stock exchange, debentures and bonds issued by the government bodies, municipal and public bodies. Typically, bonds are traded over the counter, but a few corporate bonds are sold in the stock exchanges. It can enforce rules and regulations on the brokers and firms that are enrolled with them. In other words, stock exchange is a forum where securities like bonds and stocks purchased and traded. This can be both an online trading and platform and offline trading platform, physical location. Meaning, this comes under the treasury sector, which provides services to the stock brokers and traders to trade stock, bonds and securities. Stock exchanges help the companies to raise their funds. Therefore, the companies needs to list themselves in the stock exchange and the shares will be issued, which is known as equity or a ordinary share, and these shareholders are the real owners of the company. The board of directors of the company are elected out of these equity shareholders only. What is stock exchange? The Securities Regulation Act 1956 defines stock exchange is an association, organization or individual which is established for the purpose of assisting, regulating and controlling the business in buying, selling and dealing in securities, or it is place where shares of public listed companies are traded. The primary market is where companies float shares to the general public in an initial public offering to raise capital. Once new securities have been sold in the primary market, they are traded in the secondary market, where one investors buy shares from another investors at the prevailing market price or at whatever price both the buyer and seller are agreed. The secondary market or the stock exchange are regulated by the regulatory authorities in India. The secondary and primary markets are governed by the Securities Exchange Board of India. The stock exchange was established by East India Company in 18th century. In India, it was established in 1850 with 22 stockbrokers opposite to Town Hall, Bombay. This stock exchange is known as oldest stock exchange of Asia. Initial member who are still running their business in stock exchange: D.S. Prabhudas and Company, Janmadas Morarji, Champak Lal Devidas, Brai Mohan Lakshmi Narayan. A stock exchange facilitates stock brokers to trade company stock and other securities. A stock may be bought or sold only if it is listed on exchange, thus it is meeting place of the stock buyers and sellers. India's stock exchange or the Bombay Stock Exchange and the National Stock Exchange. Purpose of stock exchanges. Stock exchanges act as an agent for the company by facilitating trade and disseminating information below as some of the way exchanges contribute. Raising capital. Through the initial public offering or issuing the new shares, companies are able to raise capital to fund operation or expansion project. This provides companies with revenues to increase growth. Corporate governance. Companies that are publicly listed on a stock exchange must conform to reporting standards that are set by regulating bodies. This includes having to regularly and publicly report their financial statement and earnings to their shareholders. The actions of the company's management are constantly under public scrutiny and directly affect the value of the company. Public reporting helps ensure that the management will make decisions that benefit the goal of the company and its shareholders, thereby acting efficiently. Economic efficiency. In addition to encourage management, efficient exchanges also facilitate economic efficiency through the allocation of capital. Stock exchanges provide an avenue for the individual to invest their cash or opposed to merely save these funds. This means capital that would otherwise be untouched is utilized towards economic benefits, resulting in more efficient economy. In addition, exchanges also provide the liquidity as it is relatively easy to sell one's holding by providing liquidity and real-time price information on company shares. The stock exchange also encourages an efficient market by following investors to actively decide the value of the companies through supply and demand. Stock exchanges is one important constituent of the capital market. Stock exchange is an organized market for the purchase and sale of the industrial and financial security. It is a convenient place where trading in securities is conducting in systematic manner. It performs various functions and offers useful services to investors and borrowing companies. It is an investment intermediary and facilitates economy and industrial development of the country. Stock exchanges are indispensable for the smooth and orderly functioning of the corporate sector in the pre-market economy. A stock exchange need not be treated as a place for the speculation or a gambling den. It should act as a place for safe and profitable investment. For this, effective control on the working of the stock exchange is necessary. This will avoid misuse of the platform of the excessive speculation, scam and other undesirable and antisocial activities. Features of stock exchange. The features of stock exchange are market for securities. Stock exchange is a market where the securities of the corporate bodies, government and semi-government bodies are bought and sold. Deals in second-hand securities. It deals with the shares, debentures, bonds and such securities already issued by the company. In short, it deals with the existing or second-hand securities and hence it is called secondary market. Regular trade in securities. Stock exchange does not buy or sell any securities on its own account. It merely provides the necessary infrastructure and facilities for trade in securities to its members and brokers and trade securities. Who trade in securities. It regulates the trade activities as to ensure free and fair trade. It allows dealings only in listed securities. In fact, stock exchange maintain an official list of securities that could be purchased and sold its floor. Securities which do not figure in the official list of stock exchange are called unlisted securities. Such unlisted securities cannot be traded in the stock exchange. Transaction affected only through the members. All the transactions in securities, the stock exchange are affected only through its authorized brokers and members. Outsiders or direct investors are not allowed to enter in the trading circle or of the stock exchange. Investors have to buy or sell securities at the stock exchange through the authorized brokers only. Association of persons. A stock exchange is an association of persons or a body of individual which may be registered or unregistered. Recognition from central government. Stock exchange is an organized market. It requires recognition from the central government. Working as per the rules. Buying and selling transaction in securities at the stock exchange are governed by the rules regulation of the stock exchange as well as the SEBI. No deviation from the rules regulation guidelines is allowed in any case. Specific location. Stock exchange is a particular marketplace where authorized brokers come together daily on the floor of market called trading circle and conduct trading activities. The prices of the different securities traded are shown on electronic boards. After the working hours, marketing is closed. All the working of stock exchange is conducted and controlled through the computers and electronic system. Financial barometers. Stock exchanges are the financial barometers and development indicators of the financial economy of the country. Industrial growth and stability is reflected in the index of the stock exchange. In brief, a market for securities, it is a wholesome market where securities of the government, corporate companies, semi-government companies are bought and sold. Second-hand security. It associated with the second-hand securities, regulate the trade in securities, deals only in the registered securities, transaction only through the authorized brokers, members of the transaction for securities to be made, and dealings only in the registered securities, only listed securities recorded in the exchange office can be traded. Declaration is required by the central government. Measuring the device indicates that the growth and security of a business in the index of a stock exchange, and it operates as per the rules, and means the stock exchange are controlled by the exchange rules and regulations and SEBI guidelines and some functions of the stock exchange. Role of an economic barometer. Stock exchange serves as an economic barometer that is indicative of the state of economy. It records all the major and minor changes in the share prices. It is rightly said to be the pulse of economy which reflects the state of the economy. The valuation of securities. Stock market helps in the valuation of securities based on the factor of supply and demand. Securities offered by the companies that are profitable and growth oriented tend to be valued higher. Valuation of securities helps creators, investors, and government in performing their respective functions. Transactional safety is ensured as the securities that are traded in the stock market or listed, and the listing of securities is done after verifying the company's position. All the listed have to adhere to the rules and regulations as laid out by the governing body. Next, number 4 is contributor or economic growth. Stock exchanges offer a platform for a trading of securities of a various companies. This process of trading involves continuous disinvestment and investment, which offers opportunities for capital formation and subsequent growth of the economy, making the public aware of equity investment. Stock exchange helps in providing information about investing in equity markets and rolling out of new issue to encourage people to invest in securities. Offers scope for speculation. By permitting the healthy speculation of traded securities, the stock exchange ensures demand and supply of securities and liquidity, facilitating liquidity. The most important role of the stock exchange is in ensuring a ready platform for the sale and purchase of securities. This gives investors to confidence that the existing investment can be converted into cash, or in other words, stock exchange offers liquidity in terms of investment. Better capital allocation. Profit-making companies will have their shares traded actively, and so such companies are able to raise fresh capital from the equity market. Stock market helps in the better allocation of the capital for the investors so that maximum platform for profit it can be earned, and encourages investment and savings. Stock market serves as an important source of the investment in various securities which offers greater returns. Investing in the stock market makes for better investment option than the gold and silver. Broker is one acts as an intermediary on behalf of the others. A broker is a stock exchange is a commission agent who transacts business in securities on behalf of the non-members. Jobber is there. He is not allowed to deal with the public directly, but he deals with brokers who are engaged with the investors. Thus, the securities is bought by the jobbers from members and sells to members who are operating on the stock exchange as broker. Thank you.